Hey, what's going on YouTube? Welcome back. It's Travis here with JT Wealth. Hopefully everybody enjoyed their Thanksgiving holiday and are continuing to have a fantastic weekend. Unfortunately, Friday was one of the worst days for the stock market, well, ever. Whether it's the Dow, the Nasdaq, or the S&P, they had absolutely awful days. And given that, we are going to take a look at 3 safe haven stocks today, just in case a lot of the hoopla about a huge market crash coming up does actually occur. We all know the market's cyclical, it's bound to happen eventually, so how do we invest in companies who are best suited to handle such a crash? That is the focus of today's video. Let's get into it. Alright, like I said guys, thanks for checking out today's video. Hopefully you find something of value in it. If you do, don't forget, take 2 seconds out of your day, smash that like button for me, and consider subscribing to the channel if you haven't already. Now here's what I was talking about in the introduction. On Yahoo Finance, there was an article that came out, said Dow suffers worst Black Friday sell-off since 1931. The Dow Jones Industrial Index was down 2.53% in its worst post-Thanksgiving Day performance since 1931. The S&P 500 and the Nasdaq, meanwhile, turned in their worst ever returns post-Turkey Day. Here is a quick image showing the absolute worst 10 Dow drops post-Thanksgiving. The one we just passed, 11/26/2021, this this Black Friday, showing up number 3, being the worst ever since the 1931 drop at 2.76%. We weren't far off that metric. And of course, I don't need to show you a graph for the S&P or the Nasdaq. It was the worst ever. So there's no chart there. They're number 1 on that list as far as it being the worst drop in history. Of course, if all of you guys have watched the channel for any amount of time, and for those of you who are maybe new to the channel, you'll know that I don't necessarily care that the market dropped significantly in a single day. I am a really long-term holder on all of my stocks, and as such, the ebbs and flows of the market don't really worry me. I'm more of a how we're going to do in 5 years, 10 years, 15 years, 20 years type of guy. So although these are interesting metrics and they do bring up a lot of deep questions, the drop isn't necessarily something I'm super concerned with, but it does showcase the idea of holding stocks that pay dividends or that are going to do really well throughout a up and down market. And that, of course, is just being well diversified. Well, this article came out and it's from MoneyWise, and it says famed investor Jeremy Grantham says the next decline will be bigger and better than anything in US history. Here are 3 of his safe haven stock picks. I do have to wonder how better got put into that sentence. If the decline or the bubble bursting or the next recession or whatever the case may be is going to be bigger than ever, how is it going to be better than ever? I would have liked to see some clarification on that. But anyway, let's get into this article. Mr. Grantham is a legendary investor and the pioneer of index fund investing, and he expects today's stock market prices to come crashing back down to earth. He recently told Bloomberg that investors who enthusiastically drove the stock market to new heights during a global recession are in for a bit of a shock. Quoted as saying, "When the decline comes, it will perhaps be bigger and better than anything previously in US history." Again, curious on his terminology there. But Grantham also predicted the dot-com collapse and the 2008 meltdown of the real estate market. He's also in charge of about $60 billion as the investment chief at asset management firm Grantham, Mayo & Otterloo, so he might be worth listening to. Now, before Grantham's predictions have a chance to come true, let's look at some of those safe haven stocks we're talking about. All right, and the first stock we're going to talk about today is UnitedHealth, ticker symbol UNH. UnitedHealth's quarterly dividend payout currently sits at $1.45 per share, and the performance of its stock, which is roughly 30% this year alone, suggests that the company is currently in a really strong financial shape. Trading at over $440, it is the most expensive stock on our list today, but please guys, remember you can use fractional shares. There's no necessary reason to buy an entire share all at once, but it does have over a 10% upside according to the 15 analysts tracking this stock on TipRank's site. Now, this company is an insurance and healthcare leader, and they're well positioned to weather any long-term financial tumult as well. Regardless of what happens to the economy, Americans are still going to need healthcare, and millions of them are already using UnitedHealth. They are a diversified company. In addition to its thriving insurance business, it also provides software and information technology to a number of clinics and hospitals. So as the medical space continues to grow, so should UnitedHealth's profits. Now, the second company we're going to talk about today is US Bancorp. And ticker symbol USB is the parent company of US Bank, which is one of the country's largest banking institutions. USB was trading at about $57.40 at close of business on Friday. Of course, remember, that was a really bad day for the markets, but it has an upside potential of almost 15% in the next 12 months, according to the 11 analysts tracking this stock. And now it might seem counterintuitive to bet on a bank stock during a market correction, but banks tend to do really well with rising interest rates. And as rates increase, the profit margin or spread for these banks earned is widened. So rather than turning itself into a casino through the kinds of risky derivative plays that tanked some of its competitors in the 2007 to 2008, the US Bancorp instead has been focused on innovating and providing digital service for its customers. The increased efficiency and lower operating costs that result should be music to any investor's ears. And of note, since the beginning of the year, US Bancorp has risen by about 31% so far. Alright guys, last on our list, a real personal favorite of mine as far as my dividend portfolio goes, or just dividend investing on a whole, and that is Coca-Cola, ticker symbol KO. So despite the push for more healthy food and beverage consumption, Coca-Cola's dominance of the soft drink market remains completely unmatched. Price-wise, Coca-Cola is trading at just under $54 a share, and they have almost 15% upside potential in the next 12 months at about 14.42, give or take. But they've got 8 analyst ratings tracking this stock, and again, this is one of the best dividend payers out there. On top of soda, Coke also sells popular water brands like Dasani and Smart Water, big name juices like Minute Maid and Simply, and international coffee products Costa and Georgia. Now, what makes Coca-Cola such an interesting defensive play is the company's consistently impressive profit margin, which has averaged 23.6% over the last decade. That's largely the result of their ability to tinker with the portion sizes and prices and having the capital to invest in greater productivity. Now, a faltering market shouldn't change any of those dynamics. This year alone, Coke's quarterly dividend payout hit 42 cents, almost double what it was a decade ago. And the company's stock is up about 4% since the beginning of the year. Alright guys, so those are 3 of the safe haven stocks Jeremy Grantham has been putting his money and his people's money into. And again, remember, he's dealing with $60 billion worth of investors' funds. So he needs to be smart about how he uses that. He certainly isn't just going to go out and throw it all into ADA or Bitcoin or Ethereum, right? He has to be very intelligent in how he deals with that and how he anticipates market corrections. So when making your own portfolios and determining the type of risk level you have, you might want to put some thought into that as well, and make sure you've got a well-diversified portfolio with stocks that can weather any potential storm that could come up. Anyway guys, thanks so much for checking out today's video. Remember, this information is just to kickstart your own due diligence. It's not nearly enough to tell you whether or not you should buy or sell any stock, and I'm not your financial advisor. So never buy or sell anything just because somebody on YouTube talked about it for 5 to 7 minutes. Alright guys, thanks so much for checking out today's video. If you enjoyed it, please smash that like button for me, consider subscribing to the channel, and until next time, bottoms up.